For 50 years, oil has fueled more than just the global economy. It's been the lifeblood of the dollar itself. Every barrel pumped and every tanker shipped carried an invisible tag, paid in US dollars. This simple rule built the petrodollar system, the backbone of American financial power. But the world is shifting beneath our feet. Gold is hitting record highs, Bitcoin is climbing, and oil is becoming political again. So if the petrodollar defined the last century, what will back the next one? Welcome to Plugged In Crypto, where we break down ideas, news, and charts. In 1971, when the US ditched the gold standard, oil stepped in to fill the void. By the mid-70s, the US struck a deal with Saudi Arabia. Price oil in dollars, and America would provide security and access to its financial system. The world needed oil, so it needed dollars. Every energy import created demand for US treasuries, making the dollar backed by oil, not gold. That was the birth of the petrodollar era. For decades, this arrangement held global trade together, with nations storing dollars as reserves. But now, cracks are starting to show. In 2025, the global order no longer runs on one pipeline. BRICS nations are trading energy in yuan, rubles, and local currencies. Sanctions have weaponized the dollar, pushing energy producers to seek neutral settlement options. And technology is introducing something revolutionary: digital assets that can move value without intermediaries. This is where the PetroBitcoin theory comes in. It suggests that energy itself could soon back Bitcoin, not by decree, but by market logic. Oil is stored energy, while Bitcoin is monetized energy. One fills tanks, the other fills blocks. Proof of work turns real electricity into digital scarcity. Every Bitcoin mined represents energy consumed, verified, and stored as value. That's why some call Bitcoin energy money. It's the first asset whose supply is tied to physics, not policy. Energy-rich nations are taking notice. Russia, Iran, and parts of the Middle East are mining with stranded gas. El Salvador is harnessing volcanic energy for Bitcoin. And companies from Texas to Kazakhstan are converting excess oil field power into Bitcoin revenue. Imagine an oil producer facing sanctions, unable to sell barrels. Instead of wasting that energy, they spin up a Bitcoin mine. The result? Stored energy in digital form, portable, borderless, and globally liquid. That's the first step toward a world where oil indirectly backs Bitcoin. Every time a government inflates its currency, the energy cost of mining stays stable. That's what gives Bitcoin its credibility in energy markets. It can't be printed, it can only be produced. This shift could redefine how nations view their reserves. Instead of selling oil for dollars, energy-rich nations could mine Bitcoin directly. They'd convert natural resources into a neutral reserve asset they control. No SWIFT, no IMF, no political gatekeepers. Bitcoin becomes the bridge between energy and finance, just like oil did for the dollar. It's programmable, globally liquid, and transparent. Transactions can settle instantly through Lightning or sidechains without Western intermediaries. For governments, that means energy sovereignty. The incentives align perfectly. Producers gain independence, consumers get neutral settlement rails. Markets gain a monetary base linked to measurable energy, not political promises. Of course, there are challenges. Bitcoin is volatile, and its market is still small compared to global oil. Environmental critics argue that proof of work wastes power, but that criticism overlooks the trend toward greener energy sources and improved efficiency. In the long run, the question isn't whether mining consumes energy, but whether it monetizes energy that would otherwise be lost. If that's the case, the PetroBitcoin concept isn't just speculation, it's evolution. Imagine a world where energy-producing nations hold mined Bitcoin as collateral for trade. As the petrodollar fragments, global finance will seek neutral ground. Bitcoin, secured by energy and math, fits that requirement better than any fiat currency ever could. Picture the early 2030s. Oil contracts still priced in dollars, but settlement happens on digital rails. Countries pay with tokenized reserves, some backed by Bitcoin mined from their own energy. Lightning channels link sovereign nodes across continents. A payment for oil clears in seconds, verified by code, not banks. The petrodollar doesn't collapse. It fades into a new hybrid system. Energy remains the foundation, but Bitcoin becomes the settlement layer. Oil backed the dollar for 50 years, but energy always finds a more efficient store. Now that energy is backing Bitcoin. If you enjoyed this content and want to see more, please like and subscribe. Always be plugged in.